All right, so we are here today with a very special guest, Karyna Gutierrez. She's with Exfinia Financial Services. How are you, Karyna?
Good, good. How about you, Jennifer? Thank you
I'm
for the
good.
invitation.
So I was reminiscing this weekend that I have known you for 26 years. That was when I lived. So Karyna and I know each other. I was an exchange student in Mexico. So there has not been a person that I've known. Karyna is so studious. She was always studying more. She was always making better grades. And it has continued. I've known you for a really long time. So your ethics are super strong. So I know that you're the best person on this topic that we're going to talk about today. So Karyna, we were talking actually over the weekend, just personally about why you personally are revisiting all of your life insurance policies. So tell me about that and why it's an urgent time for everybody to do that.
Yes, thank you. It's very important because right now we need to make sure we are properly protected. Our needs change with time. Our financial needs, our financial obligations. So we need to make sure that we are not overinsured, that we are not underinsured. How do we calculate that we have the proper protection? We need to calculate the income that we need to replace monthly, and then times the number of years we will need to replace it.
So let's say, for example, Karyna, let's say I make, do I do it on me individually or household, like me and my husband?
Yeah, on the person that we want to replace the income, because
Okay.
we each of us, if we have two breadwinners in the household, we need to calculate the proper protection for each breadwinner.
Okay, so let's say I make gross per year 60,000, which is 5,000 a month. So then what's kind of a quick calculation on that?
Okay, so they will need to replace 60,000 per year times the number of years they need to replace it. So at least I will replace it until the youngest child graduates from college. So
Okay.
we are assuming if we have, let's say, a 3-year-old, usually kids graduate from college between 22 and 23 years old.
So no matter how many kids I have, we take the youngest and figure out how many years he or she has until graduating college. So let's say that's 10 years.
20 years or 20 years or 10 years, whenever, depending on the age.
10, then I would need to replace 60,000 a year for 10 years. I need to replace 600,000.
Correct.
Okay.
Correct.
Okay.
And on top of that, we need to add the debt that the household has. So that person that is alive will have covered already all the debt. So we need to add the mortgage, any student loans, if we have credit card debt, auto. Yes.
Okay. Because then the policy, let's say I have a $1 million policy. That, and let's say my debts are 400,000. So I would need if I passed away, let's say, then the 400,000 would go to pay my mortgage and my cars and all that, and then I'd be left with 600,000, which would be my income to last until that child goes to college.
Exactly.
Actually, for my spouse or my beneficiaries. Okay.
Exactly. And on top of that, if the household would like to consider the cost of college, and this is very individual for every household. Some people, they say, no, I'm not going to pay for my kids' education, so we don't consider that at all. Some people will say, I'm going to pay for 50% of my kids' education. We will consider 50% of the cost of the number of universities we will need to cover. And the type of university also we will need to cover. If, let's say, we are talking about a UT or an A&M, a state university, well, usually we can calculate current fees, room and board and everything between $25,000 and $30,000 per year.
Okay, got it. So once you have all that figured out, so tell me why now, let's say that I already have insurance in place. It's a good time to review it, right? To make sure I have enough coverage. But then why is it important right now that you were telling me that kind of sprang me into action? Like today, specifically with what's going on, why is it important to make sure we do that now?
Yes. First of all, we anticipate some changes happening in the life insurance industry. First, most likely costs are going to increase. And right now, we are healthy. So we can get very affordable life insurance. But if for some reason our health changes, then if we want to apply later for life insurance, it might be more expensive or we might not even qualify. Another thing that we expect insurance companies to do in the future is that they might include a question in their questionnaire asking, were you affected by COVID-19? Yes or no? And we need to be truthful. And if we say yes,
Yeah, like I
they
said, yeah.
we need to let them know, and they will ask perhaps for more in-depth health review.
Documentation. Okay.
Yeah, so if they see that our lungs were damaged or any other internal organ was damaged, then our life insurance policy cost is going to be higher, or we might not even qualify if we got severely affected. So it's very important that we review that right now, especially because we need to make sure that we have living benefits in our coverage. Most of the people that have life insurance, they cover them only in case of death. And that's a risk, but not the highest risk. The highest risk is to develop a long-term illness during our working years. So we need to have also that protection in case of a chronic, critical, or terminal illness. And it's so affordable. The cost of a life insurance policy that only covers you in case of death, and the cost of a life insurance policy that on top of that covers you in case of a long-term illness, the costs are almost identical. It's a very tiny difference. So it's really worth it to review and make sure that we have the living benefits.
Yeah, that is a good point, because you don't know that you really wish you had the life insurance until you need it. Like even someone who's 30 or 40 can have something happen that they become either paralyzed or lose one of their functions, that they can't work anymore. And so then they can take something out of this policy to give them money now and not just when they die. So yeah, I know there's lots of good options available. So I'll make sure to have your contact information here at the end of this video. But is there anything else before we go that anyone needs to know?
Yes, people need to understand why it's so important to have the living benefits, because if we think in pure financial terms, it's way more devastating a long-term illness than a premature death. Because we don't only lose the income of that person, now that person that becomes ill becomes also a huge expense for the household.
Yeah.
So
if you're 40 or 45 and you have a long-term illness and you're on life support, or you're on some type of needing a nurse for hours a day or whatever, you're still, of course, maintaining your life, and that could go on for 20 years.
Yes.
Yeah,
And if we don't have, and if we don't have the proper protection, where is the money going to come from? From the savings. A financial plan could be devastated, and the savings could be drained very quickly. And then what? What is it going to happen? Especially, I talk a lot about families that sometimes the wives stay home taking care of the kids, while the husband is the entrepreneur, the breadwinner, etc. What if something happens to him? How is she going to pay the mortgage? How is she going to take care of a sick husband, work, get kids out of college? Yeah, and if she paused her career for a while, so it's going to take her a while to develop again, to launch again her career, and it's going to take her time to make whatever he was making. So it's very important to have that protection, to give her time to go and develop her career and start making more money.
Yeah, that's super important. And I know that a lot of people ask me when they get the mortgage, they're like, "Hey, do you have an insurance that can cover me if something happens to me and I can't make the payment?" And I always say to them, you need to get with someone. It's part of a life insurance plan, so it will cover
Yes.
you on the mortgage as well. So, well, thank you for Karina for today for sharing that with us. Very, very important information. So, contact Karina to get a no obligation consultation, right? I'm assuming.
Exactly. A completely free protection analysis. We will be happy to review, and if we will let them know this is the right protection, you're good, or if it could be optimized, we will let them know as well. Thank you very much for the invitation, Jennifer.
Yeah, you're welcome. Talk to you soon.
Take care.
Bye.
Bye.
Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.